STRC just hit an all-time low. SATA traded down to $93 and snapped back, and the digital credit instruments had their most volatile week yet. Some people are panicking. I'm seeing a 13% yield. Now let me explain what's really going on, because the headline and the reality are two very different things. Grab your coffee. Let's start with the elephant in the room. STRC, Strategy's Stretch Preferred, traded down into the low 80s last week at $83, an all-time low. It's recovered to about $88, $89 in pre-market this morning. So what happened? Four things hit all at once. Number one, SATA's daily dividend launch was the shiny new toy in the room. Capital rotated towards Strive's instrument. And two, Bitcoin was down, dragging sentiment across the whole complex. And three, a bear narrative formed around Strategy depleting its USD reserve to buy back those convertible notes last month. And four, the macro scene. SpaceX, AI, and a wave of capital markets raises are sucking the air out of the room. And new Fed Chair Kevin Warsh held his first meeting. He held rates steady, but struck a neutral to hawkish tone. Not the easy money signal the market wanted. 4 headwinds, 1 week, and STRC took the hit here. Now, here's why I'm not panicking. I'm paying attention. STRC pays its dividend on $100 par value. At an 11.5% rate, that's $11.50 per share per year, fixed to par. But STRC isn't trading at $100 right now. It's trading at $88. So if you buy a share at $88 and collect $11.50 a year in dividends, your effective yield isn't 11.5%. It's over 13%. $11.50 divided by 88 is a 13.07% effective yield. And that's the beauty of buying a par instrument below par. The dividend is fixed to $100, but you're paying less than $100 to get it. For income investors, an all-time low in STRC price is an all-time high in STRC yield. Now, is 1 month of a stress test a concern? No. 6 months of STRC stuck below par? That would tell us the plumbing is backed up and capital isn't flowing. But one volatile month during a Bitcoin dip and a flashy SATA launch, that's noise, not signal. So what did Strategy actually do this week? They bought 520 Bitcoin between June 15th and June 21st at just under $67,000 per coin, around $35 million deployed. Their holdings now stand at 847,363 Bitcoin. It's a small buy, and that's deliberate, because here's where the money actually went for their common stock ATM issuance. Strategy raised $335 million through the MSTR common this week, and most of it did not go into Bitcoin. It went into the USD reserve, which now sits at $1.4 billion. That's roughly 9.8 months, almost 10 months of preferred dividend coverage, up from 7 months just a couple weeks ago. So read that signal clearly. With STRC under pressure, Strategy is deliberately fortifying its credit quality. They're telling the digital credit market, your dividends are safe, we've got nearly 10 months of coverage in cash, and we're still adding. That's not a company in trouble, that's a company defending its instruments. Now let's talk about Strive, because they had a monster week. Strive bought 759 Bitcoin between June 15th and June 21st, more than Strategy last week, and they bought it at just under $66,000 per coin. Their holdings now stand at 19,864 Bitcoin. Now, why so aggressive relative to their stack size? Because SATA traded at par on the daily dividend news, and when your instrument is at par, the ATM on that preferred equity fires. Strive raised capital and deployed it straight into Bitcoin. Our SATA tracker estimated around $39.6 million in ATM proceeds. Strive reported a bit less, with some common stock sales mixed in. You can track SATA and STRC issuance in real time at bitcointreasuries.net. Now here's the perspective stat. 759 Bitcoin is roughly 3.8% of Strive's total stack, bought in 1 week. That same percentage of Strategy's 847,000 Bitcoin would be over a 32,000 Bitcoin buy in 1 week. That's a top 3 all-time week for Strategy proportionally. And Strive does this with zero debt, maintaining their roughly 18-month SATA dividend runway as a standing rule. No leverage, just preferred equity and conviction. Now, to the supply vacuum. And there's a notable milestone this week in the other direction. Strategy bought just 520 Bitcoin, while miners produced 3,150. That's 16% of the weekly supply. Miners dominated, and year-to-date, Strategy has accumulated 174,000 Bitcoin, while miners produced 77,000, still buying at 2.3 times the global mining rate. but the supply vacuum has now slipped to 97,463 Bitcoin, back below 100,000 for the first time since it crossed. 3 pacing weeks and a reserve-building focus pulled it back. That's not bearish, it's strategy choosing credit quality over raw accumulation right now. When STRC recovers to par and the ATM fires again, the vacuum will reopen fast. So here's what I'm watching. 1. Does STRC climb back toward par now that the SATA launch hype is normalizing? What's the $88 to $100 path? 2. Early July, Strategy's STRC dividend rate announcement. With this price action, I still think there's a 25 basis point bump to 11.75% on the table to defend par. It's possible if it trades low for even a prolonged period, it could be bumped by 50 basis points up to 12%. 3. SATA's daily dividend in action. Their first full stretch of payments are rolling out. Does the novelty hold capital, or does some rotate back to STRC? 4. The macro, Warsh's Fed, capital markets crunch, and Bitcoin's price. If Bitcoin reclaims 70,000, the whole digital credit complex breathes a lot easier. STRC at all-time lows isn't a crisis. It's 13% yield and a credit quality flex from Strategy. Strive is buying the dip hard, and the supply vacuum will reopen when the instruments recover. 1 month of stress is noise. Let's watch for the recovery. For real-time tracking of every Bitcoin Treasury company on the planet and live STRC and SATA issuance, visit bitcointreasuries.net. Subscribe to the newsletter, the link is in the description, and make sure you subscribe to this channel. Don't forget to stay orange. I'll see you next Monday.